September 2008. Wall Street stood on the edge of total collapse. The fall of Lehman Brothers would trigger the worst financial crisis since the Great Depression. For 158 years, Lehman Brothers was a Wall Street icon. But hidden risks in the housing market would bring this giant crashing down. It all started with the American housing bubble. Easy credit and skyrocketing home prices created false confidence across the nation. Banks aggressively issued subprime mortgages to people with poor credit, believing house prices would keep rising forever. These risky subprime loans were sliced and diced, then bundled together into complex securities called mortgage-backed securities and collateralized debt obligations. They were then sold globally as safe, high-return investments. Lehman Brothers placed massive bets on these securities, using extreme leverage, borrowing over 30 times their own capital. The first major shock hit in March 2008 when Bear Stearns collapsed and was forcibly sold to JP Morgan Chase. Lehman's losses grew rapidly. Despite desperate efforts to find new capital, investor confidence completely collapsed. Over one dramatic weekend, Lehman tried desperately to find a buyer, but no bank or government rescue deal materialized. We have breaking news. Lehman Brothers has filed for bankruptcy. On September 15, 2008, the largest in U.S. history at over $600 billion, the news hit markets like a bomb. Stocks plunged instantly as fear and panic spread through the entire financial system. Banks suddenly stopped lending to each other. The global credit markets froze, threatening to shut down the entire economy. The Dow Jones Industrial Average crashed more than 500 points that day, its biggest single-day loss since the 9/11 attacks. The crisis spread rapidly around the world, triggering massive sell-offs in every major stock exchange globally. The impact devastated the real economy. Millions of Americans lost their jobs, homes, and retirement savings. The U.S. government was forced to launch unprecedented bailouts to rescue banks and prevent a complete economic collapse. The Troubled Asset Relief Program, or TARP, was created to stabilize the financial system. Lehman's dramatic fall exposed how dangerously interconnected the global financial system had become. The 2008 crash changed banking regulations forever, and its painful lessons continue to protect the world economy today.